Hello, crypto. Welcome to another episode of wow, I forgot my own title. Crypto rules everything around me. Cream. Follow the cream. Get closer to your dream. This channel is created for technical analysis, educational purposes, and entertainment only. I'm not a financial advisor, so don't take anything I say here as financial advice. Everything's strictly my opinion, and it's a way to track the performance of my portfolio in the crypto market. It's been a while, guys. The reason why I was away because I got sick for a little bit. Then I was out drinking on the weekend and I got pretty smashed. So I was recovering from a 2-day hangover. No, it's been way overdue for me to drink. And yeah, I basically polished off a bottle of, I think tequila with one of my brother's friends. Got a little too drunk and then we even started sparring drunk. So the next day my body was hurting. Not advisable to do when you're drunk, but hey, you do stupid things when you're drunk, right? Anyway, let's get started. I missed a few days. Sorry if I've been away. It is June 9th. We're almost halfway in June, and the market seems like it's still unsure what it's doing. Today's episode will be a quick tutorial on the indicators that I use, buy and sell signals. Quick tutorial on how to read candlesticks. I don't really use them, but I put them there for people who wants to know or wants to understand candlesticks better. And the only candlestick signals that I use when I do initiate or execute a buy or a sell trade, right? So if I want to buy or short, I do look at a few candlesticks, but I don't use them a lot, but they're there, but they add conviction to my calls if the charts do line up. Anyways, let's get started, guys. Enough of me talking. That's why I've been away. So so right now, as of today, June 9th, all right, Bitcoin is at 30,343. Wow, that was a big drop all of a sudden. So we're at 30,343 as per fiatleague.com. It is down 1.24%, high of 30,932, so it almost hit 31,000. One of the resistance that I have since last week, and a low of 29,974. Let's quickly look at the Coinmarketcap. Currently, wow, we're dipping low, man. So market cap is at $1.2 trillion. Like we were used to seeing it at 1.7, 1.9 like last month. So it took a big dive. One was because of the Luna crash, and I guess two other things in the market, right? A lot of things going on in the world, so there's not a lot of confidence right now in the stock and in the crypto market. I'm assuming due to all the global things, crisis that's happening around the world, right? So they do they put an impact on the investors' sentiment. So yeah, so we're dipping lower. It's not a good thing, but it is what it is. Currently, the BTC dominance is at 46. So although the market cap is going down, BTC dominance is increasing. So this means that whatever BTC does, it has a higher impact on what the altcoin prices will have, right? So last week, I think it was 44%, and this week 2 weeks ago, it was 44%, and this week it is at 46.4. So it went up 2% since last week. And Ethereum dominance is at 17.5%, all right? So Bitcoin will always be king. No matter what it does, it will affect all the altcoins, right? So until altcoins decouple from the charts, this is what BTC will always have an influence on the prices. So we'll do a quick rundown on where the price is at. This is the daily chart right here in CoinTrader Pro. Again, we're just consolidating, man. It's nice to see the price is above the 10 and 20 EMA, but these are my short-term EMA indicators. Not much really going on. Although it did break this where is it? This was the resistance that I was hoping for it to break first, and it did, but then it came back down. I called it a dead cat bounce. So when this happened, I told you guys to be careful, and everyone's getting excited. Oh, bull runs here. No, it's not. So as you can see, here's one of the candlestick patterns that I look at the most. It's either a top or a doji star, right? Whenever you see these candlesticks forming a doji star or a top, it is usually a sign or an indicator for a reversal. So it was bullish here, then it was me seeing this shows that there's going to be a reversal happening because of that doji star or the top candlestick pattern, right? So it needs a lot. BTC needs a lot to break over the next resistance level, which is around here at 33 and 34,000. So it failed. It tried, but it basically it's a bull trap. And now look, it went back down. All the gains we made here, we lost over here. And then now we're doing a little bit more consolidating and sideways action. Currently, RSI is still, like I said, it needs to break up over 50. We did hit 50, but it climbed back down. Let me chart that up. So the 50 is right here, right? So we did break above it for a little bit, but and now as you can see, the RSI is right below the green line again. So not much really going on. To me, it's just confused. I would get excited if Bitcoin keeps retesting resistance levels, but then it comes back down and then it keeps testing support levels, right? And what's my rule of thumb, guys? The more it tests support, the more it has a chance to break down lower. So I will not be surprised if Bitcoin goes lower and retests this price that it wicked down to at 26,000, because it keeps going at testing the support level price, right? So, but if it was the opposite way, if it kept testing 31,000 to 32,000, then I would say we're close to breaking resistance and we could be moving up. But as you can see, once the price goes down, it keeps going down in these support levels. So if it tests support level at 29,000 again, I do expect 26,000 because it wicked down here. And for my previous video, I always said that 24,000 and 26,000, 24,000, 22,000 are never out of the picture, just because of all the things happening around the world. We have the inflation, recession talk, the war still happening. So I would never count out this 24 and 22,000 just because of all those things. If they announce something really bad, it could really tank the stock market and the crypto market as well. So I'm not saying it will, but have an open mind that it will hit there, okay? So yeah, it's just like I said, we've just been consolidating. We're testing support levels more than testing resistance, so I'm bearish. And yeah, it is what it is. So let me change that color. So the support zone that it needs to break before we start trending down is this support zone right here at around 29,000. And if that breaks, like I said, the next one will be here at 26, where it wicked down to, right? So don't be surprised, guys. But like I said, again, I keep repeating myself, the more it tests resistance. So if I see it flip somehow and retest resistance levels around here at 31,000, then we could be on the way to breaking this resistance and then trending upwards. But for now, it's just moving sideways. Which way it will go, we'll see in a couple of days. But let me switch to a week, the weekly chart. I am bullish on the weekly chart because, as you can see, right, it found support level in the 200 EMA. All right, so it kept touching down here in the 200 EMA, but it kept bouncing back up. So in a way, the weekly chart is looking bullish to me because it found support level here. I'm not saying that we could reverse back up, but it would take, since it's a weekly chart, it will take weeks for this to reverse. And this MACD is kind of giving me a little bit of hope because it looks like it might do the bullish cross soon, but again, it will take weeks. So I need to see that green line cross over to the red. I don't know what that is. Let me delete it for a second. So I'm trying to do an arrow there. So I need that green line to go up and cross over the red. Okay, so that will be the bullish cross. And the RSI, we're still in the oversold level, which is just above 30. All right, so the weekly gives me hope, while the daily is looking bearish. Right, so whatever happens in the daily, it could recover in a week. Let me quickly see the 3 days. Yeah, 3 days, same thing. This is the so the 26,000. It's still, we could still test it, but I like what I'm seeing here in the 3-day chart. Look, the bullish cross forming in the MACD, and The RSI is making higher highs. As you can see, it dipped below 30, which is overbought, and then it is now forming higher highs. I mean higher lows. Sorry, I'm just too many like terminologies, right? So I tend to get it mixed up. So I'm gonna apologize now if I do. But as you can see, once it hit that 26 level, all the buying pressure started coming in, and then it made a higher low, and it is now. So we could probably see RSI test this trend, come back here, and it bounce back up before we see anything, right? So 3 days bullish cross in MACD. It looks like we are trending up in RSI, and it looks like we're kind of forming. Now I'm not saying the bottom, but we are testing support levels. So yeah, I think, in my opinion, once we hit the 26, if we don't hit the 24, 22,000, 26 could be a good rebound where we could just reverse, right? But I'm not saying that it could reverse from 26. I'm saying it could happen because my target is still 22, 24 until we do a strong reversal. Sucks to say, but it is what it is. That's just through my TA, my technical analysis, and it's through my through like all the fundamentals that I've been looking at, and globally it's not looking good, right? Business wise, the economy. So we could dip lower. Again, this is just my opinion, guys. So yeah, so that's my quick analysis on Bitcoin, right? So I made a quick PowerPoint for you guys, for you people who are just learning TA. And if you guys are new to my channel, thank you for joining me and taking the time to learn these indicators. You are here learning because you want to be financially set in the future, or you just want to be a better trader, or you're looking to learn how to use indicators, right? So the first step, it's a good thing. It's a good thing you're learning this, because you're taking initiative and learning how to invest by yourself instead of getting someone else to invest for you, right? So it's definitely a good skill to have. It's not as hard as you think, and if I can do it, you can do it. Okay, let me pause it for a second. Okay, guys, I'm back. Sorry. So let me start the PowerPoint. And yes, so also, if you guys are new to my channel, I made a video. I think it was just the video before this one, how to set up the indicators that I'm using: EMAs, RSI, MACD, and I think the newest one was the stock RSI on KuCoin, right? So if you guys need to learn those, check out the video on the top right corner. Now I'll post it, and you could learn how to set up your charts on KuCoin exchange. Okay, so click it now if you guys want to learn how to use my indicators. And for now, let's get started on this PowerPoint, right? So I made this morning. Whoops, sorry. Let me go back. Whoops. All right. So here it is, my buy and sell signals trading indicators 101. All right. This is the cream tutorial. All right. Also, I'm gonna say this right now. This is not financial advice. Even though these are indicators, don't assume that these will automatically give you gains. These are just guides to position yourself better and more accurately into a better position, instead of just guessing when to buy and when to sell, right? So these indicators, if you're gonna use them, it's just a way to position. All right, so position yourself better in bet, maybe hoping getting into a better price and exiting and taking profits. All right, so again, these are not accurate. They can only become accurate on depending on your research, depending on your experience, because there are a lot of fake outs in the crypto market. Okay, so before you get good, you need years of experience. I've been trading stocks since 2008, 2009. I traded options, so I had experience on how to use whatever indicators, and I've used a lot of different indicators, and so far these are the most accurate for me. Again, I'm gonna say that again. There's a lot of indicators out there, and these are the ones, through all the experience that I have, these are the ones that gave me the most accuracy whenever I'm reading charts. All right, so these are the ones that work for me. Eventually, when you start trading and gaining experience, you will eventually find what works for you. But for now, I'm giving you guys the basic of what I use, and use them accordingly. Don't always expect profit, because it takes a lot of losses to get good in trading. All right, so I've lost thousands of dollars, and I've also gained thousands of dollars. So it comes with experience. I cannot stress that enough. Just because you you are going through this video doesn't mean after you watch this video you're going to be an amazing trader. No, you need to experience what a fake out is. You need to experience what losses are so you don't get reckless. Losses give you, they humble you, and they always let you know that no matter how good you are in reading TA, you can never outsmart the market. So you always take what you can get. All right, this is my personal experience. Don't always say that you can predict the market, because no, it will definitely humble you, and that's just through experience. So all that advice, it is not financial advice. Let's get moving on to my indicators. Okay, so candlestick patterns, right? So someone has asked me before, what do they mean? What do the wicks mean? So basically, if it's a green candle, it is a green day that day, right? Or if you shorten up the hours, if it's a 1 hour chart, that if the previous hour was higher than the previous candle, it will be a green candle. So the way the green candle reads is basically it opens. So the candle before this was red, right? So since this candle is green, it opened. This is what you call the body. So for the green candle, the open's at the bottom of the body, and then the close is at the top of the body where the green is filled. The wicks will tell you the low of the day, and then the second high wick is the high of the day. All right, so that's the green candle. So let's say the green candle formed, and then the next day or the next hour, another candle formed, but it opened lower than the close, which was right here, right? So the green candle right here, you can see it closed right here. If the next candle opened below this close, then it'll be a red candle, right? So as you can see, the wick candle, the red candle, it will open high right here and then close below the wick. Below at the body, and then the wick will be the low of the day and the high of the day, right? So it's the opposite. The green candle is the low, the open is down here, while the close is up there, and the red is the open is top, it's on the top body, and then the close at the top, it's at the bottom of the body, right? So that's the basic reading of how you can tell what a green candle is versus a red candle, right? So again, last time I'm going to say it because I tend to repeat myself. The bottom body is where if it's a green candle, the bottom part of the body is open, and the top part of the body is the close. All right. And for the red, the top part of the body is the open, and the bottom part of the body is the close. That's how you read the candlesticks. Now, there's a lot of candlestick patterns out there that could read quote unquote bullish or bearish signals, but there's only two that I really use. And sometimes the less you know, the better it is. And a lot of people say this quote saying sometimes less is more, which is 100% true, because sometimes the more you try to over-educate yourself on TA, it's not good, because you just need to stick to a few indicators that work for you and that work accurately, right? So you need to learn how to filter out all the noise, and that's how I came up with these. Okay, so next slide, here they are. This is what sticks out with me the most, and this is what worked for me the most, right? So it's called the doji. It's when you kind of see a star forming, right? So you see the wicks up there, and then the body becomes really small, and it's usually in the middle, so forming that it's like a target for, like, I guess, a shooting game or something, or the spinning top, right? It's the wicks are what do you call them? Are I guess the wicks are longer than the body, right? But the body is in the middle, so they form a perfectly middle body, while the wicks are evenly spread out, okay, from top to bottom. And these are the only things that you need to pay attention to personally, and this is what I use. But sometimes I do look at these dragonfly. It's when you see the wick and then it closes, and you see the body close at the top, forming like a cross kind of. And the doji is kind of similar to the long leg doji or the gravestone. I don't really use the gravestone, but I do kind of pay attention to the dragonfly doji. But these are the only ones that I use. So again, less is more, and this is what catches my eye whenever I'm using my buy or sell signals. Okay, these are reversal signals. And here you go. Like I said, there's a lot of candlestick patterns for bullish, as you can see here, hammer, this, that, but these are what I use the most, because they're the reversal plays. The reversal plays are kind of hard to use Again, you need a lot of experience, but they're the ones that stick out for me whenever I'm entering the market. As you can see, I circled them out, the morning star, which is like a top, right? And then a doji. It's just like basically like a cross. So to me, these are just once the trend is going bearish, I look for these to confirm the reversal, but also I look at my other indicators to confirm this, right? So as you can see here, like the trend in the morning doji star, the trend is going down, the cross form, the doji star form, and then the reversal, and then these are quick plays right here. All right, so again, these are the only ones I use. If you want to use other ones, but to me, sometimes when you know too much, it kind of confuses you. All right, so those are the bullish candlestick patterns that I use for candlesticks. Now the bearish ones, right here, right? So once a bull trend, if I'm looking for the top, let's say it was running for a bit, and then once I see this, then it kind of shows the indicator that the uptrend is kind of weakening, and then it's due for a reversal. So that's why I use the top as well, but they call it the evening star or another doji star. So if the trend is going up, rallying, once I see this, then it kind of shows me that the trend is kind of done, and it will reverse bearish. All right, so again, there's a lot of different kind of bearish candlestick patterns, but these are the only ones I use. Again, sometimes less is more. So I'm going to show you guys how these reversal candlesticks show up on actual live in the BTC chart. Right, this is the daily, not the 3 days. Let me show you and zoom in. All right, so I'm going to show you guys the high made in November. So as you can see here, the trend was up, right? Or actually here. So we had this strong uptrend right here from July till September, but it didn't have no indicator of candlesticks. So but after that, it went on a downtrend. After right here, after September, it kind of went on a downtrend right here, right? It kind of went on a downtrend. And if you were trying to look for the bottom, and I'm going to zoom in, there was that top or the doji top, doji star candlestick form, and it just reversed up. Okay, so that's one signal right there. And as you can see, the MACD just crossed, so that just kind of confirmed that the downtrend form right here was over. Again, these candlestick patterns are only accurate if you know how to spot trends. And if you're trying to time the trend when it's ending, then that's when you look for these doji top. I mean the what do you call it again? Sorry, the spinning top and the doji star. Yeah. So if you were looking at the downtrend, once I saw the top, the spinning top candlestick, then I'm kind of assuming that this downtrend is over, and then as you can see, it did an uptrend, right? So as you can see right here, the uptrend was forming, right? And this was when the November high was formed. And as you can see, November 9th, and the 68,000 or 69,000 will hit because of that wick, and look what formed up there, another spinning top candlestick. So that uptrend, if you know how to spot an uptrend, once you see a spinning top candlestick form, then you know the reversal is happening. And look, once that spinning top formed over there, it was just downtrend from here, right? So if you can time these properly, right, again, you need to be good at spotting trends before you can play these spinning top candlestick and doji star candlestick. And let me show you another one, I guess. This is the last year May, right? As you can see right here, again, the spinning top was formed right there, and then the downward trend happened. So if use these with caution, they're not very accurate, but if they do, if you can catch them, like I said, you gotta be a very skilled trader to use candlesticks. I'm not a fan of them because they rarely show up on my signals, but they do add conviction when I am looking for a reversal. Okay, so yeah, so just use them with caution. They're not very accurate, but if they work for you, hey, good for you. All right, so that's me showing the examples of the candlestick, doji, and the spinning top. So my next slide will be my MACD buy signal. Okay, so as you can see right here, the MACD has three things you got to look for. One, the histogram level, which is at the 0, which is right in the middle, right? And I always tell you guys Whenever the MACD is on the negative below 0, you wait for the bullish cross, which is when the green is about to cross over the red, as you can see right here, right? This is a screenshot of the BTC chart. I think it was a 3-day. So this is a buy signal right now. As you can see, the histogram, whenever it's below the 0, when the bars are below the 0, this is selling volume. And as you can see it tapering down, it means the selling volume is decreasing. So once the volume sits over the 0, which is right here, that's the buy volume, right? So once this bullish signal crosses the green, cross over the red, I expect the buying volume to be above the 0. All right, so this is the MACD buy signal, and let me show you how that is in the Bitcoin chart. Sorry. Yes. So this was a 3-day right here, right? So right here, that is a buy signal, but it's kind of contradicting itself because the EMA, if you guys know, this is a bearish cross. So I would be careful because this. So it could either fake out a bullish sentiment because this is the buy. It's telling you to get in, right? So you would buy right here, but at the same time it's telling you here it's a bearish cross. So I would be careful. Whenever two signals are conflicting with each other, I would just sideline it for a bit and then wait out. But at the same time, the RSI is still in the oversold area, so this could be a fake out downtrend. This could be a fake out bearish signal for the EMA. All right, so yeah, so you're waiting for the green to pierce through the red, and that's a buy signal. And as you can see right here, if I go back, it was a buy signal here, and it kind of just, it wasn't as strong. But if I scroll out, zoom out, oops, sorry, let me show a better example. Actually, let me do the 1 day. All right, again right here, see, when the MACD is below the 0 and it crosses, it does the cross, right? So it did the bullish cross, the green going over the red, basically right here, and it just did a decent rally for how many days, right? So from the signal alone, that is 40 bars, right? 40 bars. So if you time it properly and if all the indicators line up, that you can get some serious gains. All right, so that's the MACD bullish cross. So the next one is MACD sell signal, right? This is the bearish cross, and this is what I mean. The histogram, when the bars are over the 0, these are buying volume right here. As you can see, once the buying volume tapers down, and then the bearish cross forms on top of the 0, which is here in the positive side, right? So the MACD lines need to be above 0 and then form this bearish cross. When the green crosses back down to the red, that's a signal to get out, and a downtrend is coming. As you can see, the sell volume already came up, and let me show you what that looks like in the live chart. As you can see right here, bearish cross form right there, and the red candle came here. But even though it's trending down, it kind of did a last peak up, and then look, the doji, the spinning top candlestick. And if you wrote out the short position, if you were shorting here, or if you just took up profit, and if you just waited, as you can see, the MACD just trend down until it got back to the 0. It broke below the 0, which is now in the negative side. The price kept going downtrend, right? So that's how the MACD sell signal is. When you're above the 0, bearish cross is forming, and then the green cross back down to the red. As you can see, the price just declined right after that. And then the next one will be RSI buy signal. All right, there's no point of doing full screen. So RSI, RSI buy signal. Wait, what? So RSI, what the fudge? Okay, so RSI buy signal. I had to manually put these in because the RSI consists of 2 bars in the middle, the 30, which is oversold, and this is where a lot of the traders enter and buy. As you can see right here, whenever the line touches the 30, kind of just reverse up, but it can go dip lower than 30, and it go as low as 5 even, right? So if you can catch it below 30, that's even better, but sometimes it tends to reverse when it reaches the 30 zone, which is the oversold, quote unquote, zone, and that's your entry. Then that's when you enter and buy, and you execute a position in the buy or a long position, right? So and then the second part of the graph is the 70 zone, which is the oversold, and that's where, I mean, overbought, and that's where a lot of traders usually get out. But for now, this is the buy signal. So each time the line touches the 30, it is a good entry, but just keep in mind it could dip lower below 30 like it did over here. So if you're patient, you could wait for a rebound, and it will cross back above the 30 zone, and then you could ride the profits all the way to 70. All right, so RSI buy anything 30 and below if you can time it properly. Okay, so but normally even in 30 is a good entry, even though it dips lower. It usually doesn't last too long, but on a bear market, it could linger longer in the below 30 range. All right, so that's the buy, that's the entry for RSI is on 30. And to show you that on the chart in Bitcoin, you can see right here, right? If you entered on January this year, January 23rd, it dipped as low as 21 or 20. And if you got in there, you would have got in at 33,000, and then you would have rode it back up to 45,000, right? So as you can see, getting in below 30 is a good entry, and you could have rode it all the way as high as over here until it reached 65, and then it started to and then you see traders start taking profits, and then the price start going down. All right, so it just tells you if you can time it properly and ride it up, buy low over here in RSI below 30, and then exit around 65 to 70, it's a decent profit, because you can never know where the market you can never know how high the price can go, but it will give you guidance on where to book profit, because RSI is telling you it is being overbought. So a lot of the investors or traders are getting out when it's in the overbought zone. All right, so that's the 70 level right here. So whenever the line reaches 70, that's when you get out. And sorry, I kind of just went in to this next slide. So yeah, the sell, as I said, I mentioned, if you can get into below 30, you ride it out. You ride out the RSI until it hits 70 zone, normally 70, but it can go higher than 70, as you can see right here. I couldn't get those arrows out, because if I did, RSI chart would go away. But as you can see, clearly the line broke above 70 and reached as high as 90. So whenever RSI reaches 90, start getting nervous and start taking profits, because it will, once the profit taking starts happening, it will do a sharp decline down. As you can see right here, you can barely see the line, but it did a sharp downward line. Let me go back here. So yeah, so as you can see, once it reached like 95 level, it did like a sharp decline right here. Okay, so either you take profits from 70, or if you have balls, then you can ride it as high as you can. If the bull run is strong, then definitely it will break above 70 and then linger around 80 to 90 level before it starts going down. All right, so that's your sell signal for the RSI. Let me show you again on the BTC chart. So as you can see right here, once it did the high on November right here, or no, in October right here, it showed you it was at 79 RSI, right? So if you sold and waited, even though it did make another higher price. So once it hit the 79 RSI, it hit the price of 65,000, but after a week later, it made another higher high at 68, but that was it, and it was done right after that, right? So if you sold over here, it still would have been a good sell, because after 69,000, Bitcoin just started trending down in price, and as you can see, the RSI just didn't go over the 70 level anymore. It kept going down, 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 and it even went as low as this level right here, 19 or 20, right? So even sometimes when you sell, the price might still make another high, but if the RSI fails to break above the 70 level again, then expect the price to continue downwards. All right, so that's your exit position when you use RSI. Next window, sorry. Why does it keep doing that? So, okay, so then my last buy and sell signal is the 50 EMA and the 200 EMA, or I call them EMA for short. And this is the bullish cross right here when 50 EMA line is the yellow line. All right, so once the yellow line 50 EMA crosses up over the 200 EMA line, which is a 200, and which is the pink line right here, that's when you expect a bullish sentiment, right? So as you can see right here, the 50 EMA crossed over the 200 EMA, which is the pink, and once it did, you can see right here, it went from like Bitcoin went on an epic bull run from a price of, what's this, I guess 500 all the way to 2500, right? So it is a strong indicator on a daily chart. If you're just starting, learn to master this 50 EMA and 200 EMA bullish cross. It is a powerful signal for entries, and if they line up with all the other indicators I showed, expect a good rally like this one, right? And then once the EMA line crosses over the 200 EMA line, and the price sits above the 50 EMA line, as it did over here, right? Before it was below, and then as you can see, the price starts sitting above 50 EMA line. That's when you know the rally will continue. But if the price somehow crosses back down the EMA line, like let's say it crossed back down here, that means the trend is over. So you need to see so two things you need to look out for: 50 EMA crossing over the 200 EMA, and then the price of the crypto to sit above the 50 EMA line, as you can see it did over here. So the price cannot cross back down to the 50 EMA line or the yellow line, or else the rally is over. And I will show you that in the Bitcoin chart. Right here is a quick it did a quick bearish trend once it did a bearish cross, but once it crossed over, as you can see, the 50 EMA crossing the 200 EMA, yellow over the pink line, it went on an epic rally, making a new higher, the all-time high, and then it crossed back down, right? So these are the things you need to look out for, and this is what I mean. When a price crosses back down to the 50 EMA, as you can see, it violated it. It went back down below it, but it was just a fake out, and the price went back up, continuing the trend, making all-time high. So that's the 50 EMA buy signal, and then 50 EMA and 200 EMA bearish cross. This is when the price or the momentum of the rally finally is decreasing, and the price is about to go for a retracement. All right, so that's when you see the 50 EMA curving back down, and it's about to cross back below the 200 EMA, and the price going below the yellow line. Remember before it was on the top right here, as you can see on the left, the price was on top of the 50 EMA line, and the price ended up crossing back down below the 50 EMA line, acting as a resistance. But before, on a bullish trend, the price is sitting above 50 EMA as a support, but on a bearish trend, the price is sitting below the line, and then the 50 EMA acts as a resistance. All right, so that's the biggest difference there. Again, here we go. I'll show you guys in, I guess the 3-day chart is better. Or actually, yeah, just go back to the daily. So I'll show you guys how that happens. As you can see, after the full bull trend right here, the price needed to retrace back down in these support levels. As you can see, the price the momentum was weakening because the price is going back down, keeps retesting support, right, which is the 50 EMA, and then as you can see, eventually the price just broke below 50 EMA as a support. That means 50 EMA failed as a support, and then eventually the 50 EMA crossed back down below 200 EMA. And then it happened over here as well. After the all-time high we had in November, as you can see, the price broke below the 50 EMA, failed as a support, and the 200 EMA also failed as support for the price, causing the 50 EMA to cross back down on the 200 EMA, and now the price is sitting below the EMA lines, acting as a resistance. All right, so those are my indicators, and that's how you use them. Again, don't expect to get good right away. It took a lot of experience for me, years of experience, thousands of dollars of losses, thousands of dollars of gains, and thousands of times I got faked out. You need to experience these to be a good trader. Don't expect to be good right away. Okay, so if you're a beginner, learn how to use all these indicators on the daily chart for now, or if you're too eager to trade, then at least use them on the 4-hour chart or hourly chart, but don't trade on a minute yet, because that's where you get wrecked. There's a lot of fake outs on the minute. I don't advise you guys to do that yet. So again, I would start using these on the daily for now until you start seeing gains and start gaining confidence. Then you work, and then you shorter your time frame, right? Then you start trading on when you start putting these in the 1-hour chart, 4-hour chart. And when you gain confidence there, then you shorten up your time frame again, putting it in 15 minutes, 30 minutes, and so on. But for now, I urge you to learn these on the daily. Learn, experience how to get good gains, and swing trade them. Basically, swing trade is when you buy and hold for a week, and then you have a certain amount of profit, then you sell, then you get out, then you repeat it the next week. All right, so swing trade for now as a beginner, and then when you gain confidence, you shorten up your time frames into hourly. Well, I hope you guys learned a lot. Again, this is not financial advice. These are indicators that I use that work for me. And there's a lot more, and I can get into detail, but that's more my personal trades. But this is a way for you to start, I guess, in a beginner level, and understanding how to use these indicators better, and for you to start reading charts and understanding. Whenever you guys pull out a chart, you guys kind of understand where the price is headed, and maybe predicting a good entry point. All right, guys, thanks for watching. If you learn anything in this channel, please like and subscribe, or share it with your friend who are willing to trade. And hope to see you on the next one. Peace.